Hi there, this is Dennis Wells with your weekly market update. We're going into the July 4th holiday. So, a lot of times people want to talk about real estate, housing, and what's going on. And with these talking points, you can actually have something valuable to be sharing with your friends and family and coworkers. So, number one is talking about sellers' concessions. Home sellers gave concessions to buyers on 46% of home sales in May, which is up from 43% a year ago. And that's really the highest share for that month on record. So showing a little bit of softness in the listing area there. But even though sellers have been giving more in concession, what we see, home prices increased 0.3% month over month in May on a seasonally adjusted basis, which is the fastest growth rate since January. Prices have risen 2.5% from last year and the fastest year over year growth in 6 months. So take that. Maybe the concessions are helping move houses that are a little bit more expensive than they were this time last year. Also, we saw that new single family home sales fell 7% month over month in May on a seasonally adjusted basis, and prices are up 2.5% from last year. And core inflation represents the long-term trend in the overall price levels when you strip out volatile items like food and energy, and that provides a clear view of economic inflation. And that's why the Federal Reserve tends to look at core readings instead of the headline, because the Federal Reserve can really do nothing about the price of food or oil, and food is actually influenced a lot by the price of oil when you deal with transportation costs and the cost to produce food and everything that goes into the food that we eat. So we look at the financial markets. Year to date, the Dow is up 8%, and the S&P 500 is up 7.5%, and the NASDAQ has gained 8.7 to 4.3%, and the mortgage rate has risen 34 basis points to 6.49%. Now we are seeing the treasury yield start to come down and mortgage rates start to come down now that we are seeing an end to the fighting in Iran, and the oil has been flowing through the Strait of Hormuz now for a little bit of time. So that is helping with both of those things. So the national median mortgage payment was $2,198 in May 2026, which is up $46 from April, but it was down $13 from a year ago, which is just over 0.5% price decrease. And the housing momentum has started to fade a little bit because mortgage rates have stayed in that mid-6 range here. Sales growth has slowed sharply from the beginning of the year, and full year expectations now center on flat home values and slightly weaker sales activity, although rent is still expected to rise 2 to 3% this year, which means that buying may make even more sense than renting now, as there's less competition out there for houses. Sellers, like we mentioned, are willing to give up more. Interest rates are starting to come down on mortgages, and the wages have gone up year over year, which does increase affordability slightly for people. Mortgage applications rose 1% from the previous week, and purchase applications slipped 1%. So overall, mortgage application remains 8% above year-ago levels, despite the ongoing economic uncertainty. So I hope you have a wonderful 4th of July weekend. And if I can help you with anything at all, feel free to reach out. My name is Dennis Wells. I'm a mortgage advisor. I help people create wealth through real estate, and I want to make sure that you are informed with everything that's going on in the financial and real estate markets so that you can make great decisions. Hope you have a great day, and we'll talk to you soon.